But time to welcome our next guest, Devina Mehra, founder, chairperson, and MD at First Global, who joins us on the show. Hi, Devina. Good afternoon. Always good to see you win. Well, the markets have been on fire, right? You got a favorable verdict coming in from a stock market perspective. The ruling BJP is likely to get another term. So continuity is what the street is factoring in. Flows as well are solid, but everything doesn't go up in a single line. Do you think the markets could be in for a bit of a pullback phase on the headline index, point number one? And point number two, at current reckoning, what's your preference? Would you stick to the large cap names in comparison to the mid caps that have had a big party this year?
Good afternoon. Yes, the market has been having a party, at least this week. Though, I must also tell you that I've been around long enough. So I remember 20 years ago when the market got a negative surprise in that the NDA went out and the UPA came in 2004. And the first day, the market's reaction was very negative, but they forgot it soon enough. And, a month later and a year later, the market saw a great run. So, oftentimes we sometimes attach too much importance to the political results, which may or may not actually be the real driver behind markets. Coming back to your questions on the direction, so I've been saying for a while that I do not see the risk of a big crash, at least in the mainline large cap indexes. And the reason for that is very simple, that we have not had extraordinary returns on those indices. So we have this thing in mind that the equity markets give you 15-16%, but that whole decade of 2010 to 20, we got returns of only about 8.5%, 8.8% compounded, which was only a bit better than fixed deposits. So you had this whole room created when the market was far below the trend line. And even since then, because of the pandemic and various other global developments, you've not seen even that 15% return. So the risk of a crash, as I said, is limited. But you mentioned the small cap, mid cap bull run this year. So that's the part where you need to be cautious and limit your exposure. I have been seeing that the mutual fund flows have all been coming to that segment. In fact, there's been a net outflow from the large caps and a net inflow into the small caps. And risk is building up there, because the issue with small caps often is that even if, let's say, you have a stop loss when the stock starts to fall, you actually don't get an exit. And the small cap index itself has had very huge crashes in the past. You saw nearly a crash in 2008-9. You saw nearly 2/3 crash, 65% drop in 18-19. So that's the kind of index. And people who say that I'm choosing my stocks carefully, the point is that in those crashes, almost everything falls. At 2008-9, only 1% of did not fall. In 18-19, only 8% of the small caps did fall. So that's what you're talking about. So be cautious on that end. Be cautious on which sectors you pick. But the market at the large cap end, I don't see a huge amount of risk.
Okay. Devina, I wanted to get your thoughts in on banks. I can see that you recently cut your weightage, on the financial sector in your portfolio. Now, this is quite contrary to the opinion that we get on the channel, where everyone says that banks, financials, especially the large cap banks, is the place to go because of reasonable valuations. They've not participated to the extent that the rest of the market has. So can you talk about this, call of yours on the banking space, and what is it that you expect going ahead?
Okay, people tell me that I repeat this line all the time, that I'm always a nervous investor in banks and lenders, because in the lending space, you don't know where the negative surprises are hiding, and some of which were highlighted recently by the RBI and also the FM, saying that to be careful on the lending front. So, if I go back to when our PMS started in 2020 and 21, we had negligible exposure to the sectors, considering it's the largest weightage in the index. Middle of 2022 is when we went market weight in banks, because things were improving, credit growth was improving, and NPA cycle was the bad cycle was largely behind you. And as interest rates go up in the beginning, the banking margins expand because you increase interest rates on the assets or the loan side, but the deposit interest rates go up much more slowly. So those are all the positive things. So for about a year, we were market weight on banks, and with price action, actually it went to little overweight also. But now we don't think that this is the time to get into banks. Within the bank sector, banking space, we've been a little more towards the PSU banks in the last few quarters. So that's where we are, but we are underweight banks, and we don't intend to change that. And there are enough better places in the market. That's our view.
Okay, all right, Devina, and one of the better places, so to call it, would be pharma. We are celebrating the Nifty up close to 14%, 15%. An unlikely winner, so to call it, has been pharma, because the pharma index itself is done 2x of what the Nifty is done. I think it's up 29%. You'll continue to remain constructive on that space?
Yes, but pharma is one place where we started adding from, I think, January of this year. And each quarter we have been actually adding to pharma because our systems liked it, and more of the names were showing up via our artificial intelligence system in terms of the, pharma names were getting ranked higher and higher. So especially compared to the index weight, we have been quite overweight on pharma. Along with, of course, the one sector we've been overweight on for over 2 years has been industrial and capital goods, which mostly people started talking about in 2023. But we have been overweight from October 2021. And every quarter we look at whether the story is over. But right now the signals have not come that the story is over. And what we increased weight on this year, pharma was one. Auto components was another one where we increased weight in this calendar year.
Why auto and auto ancillary? And in particular, do you want to zero in on the part of the auto or the ecosystem that you like, and why?
We've actually added, I think, a little more in the four-wheelers than in two-wheelers, though we have some two-wheelers also. So it has been, it was a sector which hadn't performed well for a few years, and this year we saw changes in pattern in that. And through the auto components, of course, you can get exposure more across the board there. I mean, auto, of course, there's been a kind of uneven growth. So if you look at auto in terms of the vehicle numbers, the luxury segment, and particularly the SUVs, did very, very well. But entry-level cars and a lot of the entry-level two-wheelers also haven't done well still, which is actually reflecting what's happening in the economy. So you have to choose according to that. But as I said, that was a sector which hadn't performed for a few years. So some of those valuations had also become attractive.
All right, Devina, we appreciate you joining in, giving us your take on the markets. And I think you celebrated your birthday last week. So belated happy birthday as well from myself and
happy
the entire
birthday,
channel.
Devina.
Thanks so much for joining in and discussing.
And your birthday is coming up for the channel, so
yes.
Happy birthday for that.
Thank you so much.
It's actually my daughter's birthday also tomorrow, so she shares a birthday.
Lovely.
So double celebrations and triple if you join us tomorrow then, Devina.
Thank you, Devina, for joining in. It's, your daughter's birthday, my mom's birthday, and our channel's birthday as well. So good times, December 7th, a very, very special day for all of us. Thank you so much for joining in.